It's 10 a.m. in Lagos, Nigeria. Good morning and welcome to 55 minutes of business conversations on Business Morning, coming to you live on Channels Television. I'm Ini John Mekwa. We'll start with the global oil prices, where features extended gains today as the United States and Europe plan new sanctions to punish Moscow over alleged war crimes by Russian troops in Ukraine, adding to concerns about supply disruptions, while Iran nuclear talks stalled. Brent crude futures rose $1.20 to $108.73 a barrel, while U.S. West Texas Intermediate futures also gained $1.25 at $104.53 a barrel. Both contracts briefly jumped more than $2 a barrel in early Asian trade, after Japan said that the International Energy Agency was still working out details for a planned second round of coordinated oil releases. India state-run refinery and petrochemicals limited purchased 1 million barrels of Russian Urals for May loading, and that's in a rare move driven by the steep discounts that Russia is offering. Back in Nigeria, yesterday, the federal government ordered that all SIMs which are not linked to names should be barred. One of the stakeholders in the telecommunications industry, as the Nigerian Association of Licensed Telecommunication Operators of Nigeria, ALTON, before now has been speaking on the rising cost of doing business and the possibility of an upward review of tariffs. Now, all this came into focus at their meeting. They had a meeting yesterday with the Nigeria Communication Commission. We have the chairman of ALTON, Engineer Gbenga Adebayo, joining us now to give us some tip from that conversation and updating what's going on in that industry. Good morning, Engineer. Thank you for joining us.
Good morning, and thank you for having me.
Great. So give us a little bit of what happened yesterday at the meeting, some of the outcome of that meeting.
Well, just for clarification, we had directives received from the NCC yesterday. We didn't hold any meeting with them, but in the directive they gave, the instruction is that we should now implement and enforce the federal government directive on SIM and NIN linkage, and anyone who hasn't had their SIM card registration done along and linked with their NIM details are now supposed to be barred from making outgoing calls from the network effect from yesterday. So that was the directive that was received yesterday, and we have since complied as an industry.
All right. So what are you trying? What is the way forward now? Does it mean, as the federal government has ordered, those people, groups of people, will not be able to make calls anymore? Is there any compromise, any windows open for them?
There is no compromise. As you may be aware, we have been on this since December 2020. Government has granted several extensions over the last 14 months. We believe that it's enough window of time for citizens to have obtained their NIN details and also to have linked that up with their SIM card records with us. Number of interventions have been provided by government to make it easy for people. So really and truly, looking at the time that we've been talking about this and we have been on this journey, we think that it is actually time for citizens to have had this done. So anyone who haven't done that should please just visit the nearest enrollment center, have their NIN captured, have it integrated with their phone lines, and then they can continue to make phone calls. Whoever hasn't done that till now, with the fair from yesterday, will not be able to make any outgoing calls from any of the networks.
And then another part of that conversation was you've been talking about the hike in cost of doing business. I mean, that's not just in your sector, but like you're threatening consumers now with a possible review of tariff?
It is not a threat, and I must make that very clear. The concerns we expressed last week at our press meeting was that due to high cost of diesel supply, due to the difficulty in logistics across the country, we will be approaching government for some form of intervention in order to cushion the effect of that on our operations. If we're unable to get any form of intervention whatsoever and howsoever, we will begin a process of approaching our regulator to consider some realistic review in our prices. So we haven't said we are going to increase tariffs. We have only said we'll commence a process of first seeking intervention from government to cushion the effect of the high cost of diesel and non-availability of diesel in some instances on our business. And where we do not have a headway in that regard, we will commence the process of seeking a regulatory intervention by way of considering some realistic pricing. We're a highly regulated industry, so we are unable to proceed on our own by reviewing tariffs. We must approach the regulator, and without regulatory clearance, we will not be able to increase tariffs. What we have said is that we will consider options that are available to us, and part of which will be to approach our regulator at the appropriate time in case we are not getting any government intervention in that regard.
And when you talk about intervention, what form?
This could be in any way. It could be first to give us access to diesel, give us diesel at an official rate, because we are told that the landing cost is significantly different from the selling price. Also make it available to us, because the challenge is also that sometimes even when you are ready to pay, you don't even have it available. You may be aware that we provide the energy supply on all sites across the country. A lot of them are powered on diesel energy. And it's extremely difficult in some hinterland to actually deliver diesel to those sites. So one is high cost, second is availability. And we believe that if government can give us access to diesel at reasonably low prices, maybe at landing cost or even lower than that, it's easier for us, and also to assist us in ensuring that we have a easy rights of passage across the country to deliver them to those sites. So we are going to approach them with numbers, with facts, with real-time experience, and we hope that we'll receive the latest intervention from government.
Okay, but was this not part of your conversation with the NCC yesterday?
No, we didn't have a meeting yesterday. As I said, we just received a directive from the Commission, and that's what we are following. But it's part of what we are considering as an industry, and this is the way we now plan to go as an industry.
So when do you intend to approach the government with this, and how long do we expect it to take?
As soon as now. I must emphasize, however, that we are committed as an industry to continue to provide services to people across the country, irrespective of the challenges that we face. We guarantee service availability, we guarantee consistency of service at all times and in all places, irrespective of the problem that we face as an industry. So while this is going on in the back end, it will not have any impact in the provision of services whatsoever and whatsoever to all parts of the country. So I must assure the public there is no reason to panic, nothing to be worried about. We are not issuing any threat to the public. We are only saying that given the reality of today's economy and the reality of the cost of doing business, there is certainly a need for us to look at our numbers again so that we can continue to be sustainable, to remain sustainable as an industry.
All right, Engineer Gbenga Adebayo, Chairman of Alton, thank you so much for bringing us up to date on some of your conversations in the industry.
Thank you for having me. Have a nice day.
You too. We'll take a breather now. When we come back, we have another conversation coming on. It's the end of a quarter and the beginning of another one. You want to see how the economy fared? Join us for that conversation. You're welcome back. Well, as the first quarter of 2022 comes to an end, I mean, just a couple of months ago, we said Happy New Year. But it's a good time to take a look back at the economy for that period and possibly project on some possible trend for the second quarter. We have doing that with us, the Chief Executive Officer of Center for the Promotion of Private Enterprises, Dr. Muda Yusuf. Good morning, Dr. Yusuf. Thank you for joining us.
Good morning.
This morning. Yeah. So let's have your view. I know you sent out your release, and we see that you're concerned about the issue of insecurity, the issue of course, hiking food prices, the issue of FX is still in the front burner. So give us a summary of your observations for the first quarter.
Well, the first quarter was characterized by quite a number of challenges. And unfortunately, these challenges seems to be escalating, you know. First is the issue of insecurity. Because as an investor, you need to be alive to do business. If there is a very high risk to life, then, of course, it has very serious implications for investment. And the security situation seems to be deteriorating, especially with what is happening around the country. There are two major aspects to this. First is the aspect of insecurity around particularly the northern part of the country. These attacks kidnapping, all sorts of issues leading to the destruction of properties, loss of lives, and all sorts of attacks. And unfortunately, these terrorists or bandits, as they call them, are getting bolder by the day. And what we are seeing is that even the security agencies appear to be more on the defensive rather than being on the attack. So this is a major issue, not just for lives, which is, of course, more important, also for investment. The second component of this is what is happening to the oil and gas sector. The oil and gas sector, even though we talk about diversification, GDP being diversified and all of that, that sector is still very critical to the survival of this economy. From the point of view of foreign exchange, and from the point of view of revenue, and from the point of view of investment. We have seen what insecurity had done to that sector over the last decade. But it seems to be getting progressively worse until, of course, recently when we saw a major step being taken. You see what has happened to the issue of oil theft. All manner of percentages have been bandied around, but the reality is that a significant proportion of what we are producing is being stolen. And it seems
oil theft is getting more attractive with the, the surge in oil prices.
Oil price, yeah. And we are seeing a very strong cartel. And it has been alleged that even some of the security agencies are also part of this. So this is a very, very disturbing situation. That is for the upstream. Now, if you look at the downstream, look at what is happening to the oil bunkering, illegal refineries, and all of that. Almost a case of almost complete breakdown of law and order in part of the oil-producing areas. So, from the point of view of investment and the impact on the oil and gas sector, and from the point of view of what is happening, especially in the northern part of the country, terrorism, banditry, attack on airports, on trains, all of these things have very serious implications for investment. So that is one major thing that is of concern to the entire business community, which we expect the government to do something differently so that you can get some better outcomes. It's not enough to just call the service chiefs, pull them to a meeting, say that people will be brought to book, and before you know, before they even leave the place, another incident has happened. So that is one. The second major crisis, which is related to what the telcos are saying, is the energy cost. Energy costs is becoming a major issue. We have even seen something like being energy insecure, because in major countries talk about energy security. So there's a major risk of insecurity around energy. Look at the costs of diesel, the cost of AGO, the cost of gas, and how do you power an economy?
How much of this is linked to the war in Ukraine?
Well, there's a very strong connection. Of course, the Ukraine factor is a major one, but there's also domestic shortcoming in terms of our capacity to refine. Now, Russia, of course, is a major player in the energy market, both in the petroleum products area and also in gas. It's a major exporter of gas, and also, I think, the second largest exporter of crude oil.
Yeah.
So that makes Russia a major player. So when you see a disruption, because it's a supply chain thing, when supply has been disrupted in that axis, and oil being a global commodity, it of course has affected energy prices, diesel, AGO, and all of that. And unfortunately, which is also a tragedy in terms of our economic management, we are an oil-producing country, and yet we are importing almost 100% of our petroleum products, which is a tragedy. And unfortunately, this has been with us for the past 10 to 15 years. So that is why we are so vulnerable. And you can see the impacts on inflation. You can see the impacts on prices. You can see the impact on the sustainability of businesses. Because there's a limit to which businesses can pass on additional costs to their consumers. There's a whole lot of issue around consumer resistance. So there is the impact on operating costs across all sectors. There is the impact on production costs, particularly on manufacturing. There's also the impact on transportation costs. Because all of these trucks that move around, they are powered by diesel. I mean, you had the chairman of the Telco Association talking about the cost of logistics.
And all of this, of course, reduces available liquidity. So even as you mentioned, if the manufacturers decide to pass on the bulk to the consumers, even the consumers are limited in the liquidity available,
of course,
you know, to purchase some
of course.
this.
There's very high consumer resistance. If you talk to any producer, they will tell you. That is why many of them just try to play around with quantity of their products so that they can retain the price. Some of them tinker with the quality of the product so that they can continue in business. And some businesses have even suspended production. Some people in the service sector have cut down on their working hours.
And some are cutting down on staff. So we're talking about unemployment again.
Yes. People are now migrating from diesel generator to PMS generator, depending on the scale of your scale of your operation. So it's a major threat, you know, to the economy and to investment. The third major issue which we experienced in this last quarter is the Forex issue.
I think that's been with us for quite a while now.
It has been with us, but it seems to be getting worse. I mean, when people now talk about parallel market rate of 590, at a time people are even talking about 600. How do we manage that? And unfortunately, we are not seeing any major response to this issue of deteriorating situation with
How is
Forex.
the RT200 of the CBN? How's that going, or is it too early to feel the impact?
The RT200, first, the expectation is that between 3 to 5 years.
Yes.
We are talking of now. Between 3 to 5 years.
So that's like a medium term.
Yes, medium term thing. We are talking of now. I've heard people talk about the need to increase exports and all of that. Yes, that is true.
But what about the manufacturers who produce the exports in the first place?
Exactly. So there are all sorts of issues. So the Forex issue is not getting the right kind of attention.
What kind of attention do you think can solve that? Or at least
there has to be a policy response.
So the people are talking about merging the market, merging, you know, the...
We have said that over and over. But if the policymaker, the CBN, is not convinced, let the president or whoever is in charge of the economy convene a conversation on how we are going to deal with this. We are having conversation around security. There are some conversation around energy. We should have a conversation around the foreign exchange situation. We cannot continue like this, where the parallel market is now become the default market.
All right.
Talk to any producer.
Muda, because we're almost out of time. We're out of time, but I just need to get this. So the economy grew by 3.98% in the fourth quarter of 2021. What's your projection? What figure do you see by the time we see the growth for the first quarter of 2022?
You see, let me tell you, the concern of the average man and the business people is not about GDP growth. Because what you are beginning to, it's not reflecting on the situation. Did we not have GDP growth of 3.98% in Q4? What is the impact on the people? What is the impact on businesses? I just told you all the critical issues. We can sit here and be projecting, yes, oil price is increasing. There's a relationship between GDP growth and oil price. And so what? You go out there and tell the business person or tell the man whose purchasing power has been massively eroded that the GDP is growing. I mean, they will look at you in the face and wonder what you are talking about. We need to address critical issues of inflation, of the weakening purchasing power, of the depreciation in the exchange rate, of the terrible situation with energy. These are the very important things. We begin to talk of GDP growth. Those things are becoming more academic, especially in our current circumstance.
Wow. All right, Dr. Muda Yusuf, CEO, Center for Promotion of Private Enterprises. Thank you so much for sharing your thoughts with us.
Thank you very much.
So we'll take a break. After the break, we'll do commodities market updates. Do join us. This is Business Morning on Channels Television. You're welcome back. Well, in spite of the daily release of 1 million barrels of oil per day from the United States Reserve, global oil prices are back on the surging path. This morning, we saw it hitting $108. And then we have Bolanle Agbaje, now analyst with Financial Derivatives Company, to tell us why the U.S. release seems not to be making the expected impact. Good morning,
Hi,
Bolanle.
good morning. Thanks for having me.
Good to have you. So, we thought, and it did happen. I mean, it was last week. Yeah, there was a slight drop then for a day or two or so, but now it's back on the surge.
Yeah, so the slight drop can only be explained by the signal effect. So when you hear news of oil prices or the production of oil increasing to kind of like bring the prices down, you expect prices to react. But we all knew that it was only going to scratch the surface because the market is well undersupplied, and OPEC is still making sure that they keep production cuts at a certain level. So we've not seen that, drastic change, when it comes to the supply and demand effect. And at the same time, this morning, we had seen that oil prices actually inched up by about $2 per barrel. I think it went from about 105 to 107. And that's just because this morning, the EU and the US have released statements that they're going to impose new sanctions, on Russia.
Well, they've been saying that since, I think, yesterday, but we don't seem to have an idea of what the sanctions...
Well, it's a tricky one. The EU, for example, they had already mentioned that they're going to stop buying gas from Russia. It's more or less their medium to long term, and in the short term, they would more or less switch to other, countries like Algeria and another
Argentina.
Yes, another
they're
country.
Going to the UAE also.
UAE as well, and obviously the US. But at the moment, most of the infrastructure, the raw materials that's actually used to build or invest, in gas infrastructure is actually gotten from Russia as well. So it's like you're trying to be less dependent and less reliant on Russian raw materials, but then you still have to go back to it to, make yourself less reliant.
I think the plan is for the end of this year.
Yeah, well, not necessarily the end of this year, because it's a medium to long-term situation. To build, infrastructure is actually a lot. Germany came out to actually mention that they're looking to invest, in gas infrastructure. Although other European countries have mentioned that they want to be less reliant on oil and move towards, cleaner energy and greener, energy. But that has been mentioned for years and years to come. We haven't still gotten there up until this point. So if they had, made those moves, as fast as they could, would have been less reliant on Russian crude.
What's stopping them from investing in Nigerian gas pipeline? I mean, we've got the gas, we just need the investment.
I'm sure if you put your mind in the situation of, some of these countries, you'll be hearing news about, pipe vandalism in Nigeria and all of that. I don't think any country would look into Nigeria just because Nigeria has not even done a good job with, satisfying the demand locally. So what makes you think that they would actually...
And even the crude pipeline and crude theft is still a major
It's still a major thing. The force majors, the maintenance, all of that. OPEC actually increased our, oil production 1.75.
I was wondering why we have not been able to meet up with the former...
So I'm sure it's a strategic move because they know that Nigeria will struggle to meet that, quota. But currently our production is only about 1.4 million barrels per day. So we're not actually doing as great as we should. So
did they increase any other country apart from Nigeria?
I think they did. No, they didn't increase any other country, but they didn't also reduce or impose output cuts in Iran, for example, and Iran has actually increased production. But
they increased by themselves?
They increased by themselves, because nothing has been done about the nuclear deal so far. I'm sure most countries are, or the US rather, is more or less thinking about, what's going on in Russia and Ukraine. They don't have time.
I was wondering what stalled that talk. I mean, I thought we were in the path.
So there are other pressing issues right in front of them.
And so I'm sure attention has just shifted.
Yes, has just shifted. And, it's at this point, if they do, you know, work on Iran, and I'm sure they're trying to tread lightly at the same time, because some of these countries are, they are not necessarily in, like, with ties with Russia, but some of them are not necessarily, you know, trying to tell Russia to stop what it's doing. So they're trying to tread, you know, lightly. And also another news that came in this morning is the fact that Saudi Arabia has actually increased its price of oil. The oil that it actually sells to Asia, I think it's about 60%. So India, Japan, China, you know, and it's increased it by about $4.4 per barrel. That's huge. And that's just because, you know, it's more or less them saying, you know, for the fact that we're going to increase production slightly, like they mentioned in their last meeting, it's going to come at a cost.
But they also have the challenge. I mean, they have some war. I know their pipeline and facility were disrupted some production, I think 2 weeks ago.
Yeah, so I'm sure those are the factors that they've, you know, put in place to make sure that they actually cover the cost of, you know, those pipelines that have been, you know, destroyed. And at the same time, Saudi Arabia is, you know, we all mentioned, okay, with OPEC Plus, and what are they thinking about Russia? What are they saying? But there was an interesting comment that Bloomberg mentioned, the fact that war is business as usual when it comes to OPEC. So, you know, you had, you know, wars in the 90s between Iran, Iraq, all of that. OPEC was still going on, and it didn't even stop, you know, business for them as usual. And that's just because they're worried about market share. They're worried about, you know, the fact that they've come a long way to get prices above $100 per barrel. And it's huge for Saudi Arabia to make sure that...
I think these are some of the sentiments that have made the West reluctant, you know, to cooperate or work and be business partners with some of the countries in the UAE, because there are human rights issues.
Yes.
There are issues, you know, they're not concerned about some of those, you know, and this has stopped. I mean, I know Germany has signed an agreement with Qatar about supply, but I think that's not now. But they still have that sentiment, because I know when the UK Prime Minister went to UAE, he had some knocks back home.
Yeah, so it's you know, it's a very tricky issue when it comes to oil, because it's a global commodity. It's not as simple as, you know, one would expect. Some of these countries, there's a lot of politics involved, and they don't, you know, it's not as straightforward to make those deals as we, you know, want to. The EU, yes, is standing alone with the US, but other countries, nobody really knows exactly where they lie when it comes to, you know, relations with some of, because money is involved as well. You're playing with the main source of funding when it comes to those countries. So I think that's...
And, you know, in spite of the threats, I know we had this discussion on our Russia invasion program.
Yes.
In spite of the threats, you know, by Russia, the gas pipe has not been turned off yet. Because apparently they also need the money for their economy.
Yes, of course they do. How do the only way they're going to fund, you know, and keep going with the war is to actually keep selling and make sure that, you know, they're getting, you know, money coming in. And also the sanctions have really affected them. So they would have
I hear they're close to recession now.
Yes, possibly, because, you know, they're being cut off by a lot of countries, a lot of partners that they had deals with. So that definitely would have, you know, some negative impact on their country. And I don't think it's wise for them to, you know, cut supply when it comes to the countries that are ready to buy, and it seems like a lot of them, especially countries that are buying behind closed doors.
Yes, India just bought extra 1 million
India seems
barrels.
to be standing alone. I don't think they're trying to involve themselves with... The thing is, Russia is very crucial when it comes to, you know, the world economy. A lot of these countries actually depend on resources they're getting from both Russia and Ukraine, actually. Yeah. They produce, you know, copper, aluminium, steel, wheat. Wheat is now at record highs. Yes. Wheat currently went from $1,000, you know, dollars per bushel as at this morning to 1,040, and that's just
1,040, $40.
Yes, and I remember, you know, about 4 or 5 years ago when I started coming in here, wheat was trading at about between $200 and $300. So you can imagine the, you know, increase in prices.
I remember talking to a feed miller in Nigeria, and he said, about a month or so ago, he had this warehouse stocked with wheat because that was just an option. It was an alternative to corn.
Yes.
Now it's empty.
It's not the case, and it's just what it is. And, you know, some of these countries, even the EU, they're so heavily reliant on bread. Bread is a part of their culture.
Egypt has subsidy.
Exactly. So it would definitely, you know, bite hard.
And of course, this is feeding into food inflation.
Yes, it is. Fortunately for us in Nigeria, it seems like there's still some customer resistance, or consumer resistance, rather. Consumer resistance.
Yes,
exactly. So, you know, the fact that disposable incomes are squeezed, you're not seeing the increase in demand anymore. And, you know, most of these manufacturers are not also trying to, you know, play dirty when it comes to increasing prices unnecessarily. Although they do have to, because, you know, they're facing higher costs, but, you know, they also don't want to, you know, lose out on market share and, you know, further reduce this demand. So we're not really necessarily seeing, you know, hike in domestic commodity prices at the moment. However, you know, we're entering the planting season. The rains have begun. Between April, May, June, July, we do expect that, you know, prices would actually start, you know, inching up. I think the only price that had gone up a bit was price of rice, and that had increased from about 30,000 naira to about 32,000 naira.
Price of bread is also up.
Price of bread is, yeah, but price of bread has been up. So I don't, well, we don't know if, you know, price of bread will actually get to 1,000. If it does, you know, it will be something to, you know, and I'm sure most individuals in Nigeria, well, we're very good at adjusting. Most people will just adjust and move from bread to something else, and that's just what we do.
And maybe we'll go back to that cassava bread that the former administration was talking about.
Maybe, but I know that Nigeria, the best thing Nigeria does is look for alternatives.
And with the rain also, we expect some good news from cocoa?
Yes. So, you know, we're entering the planting season, like I mentioned. So we expect that, you know, the yields from cocoa would actually increase, although prices are not necessarily smiling at us here in Nigeria. But however, in Cameroon, they had increased prices by about 1.5%. That's not so huge, but it's still something. And I think the only reason why prices are not inching up is the fact that, you know, there's excess supply in Ivory Coast or from Ivory Coast. So, but once the planting season is over, we do expect that there will more or less be a shortage again globally, and we
then
expect
prices can go up. But unfortunately, we're not even adding value to it.
We're not adding value. We're definitely producing what I think we produce about 250,000 tons. And we don't expect that this particular amount should decline in the nearest, because if that declines, then it'll be a big problem for us, because we do need the reserve accretion.
We need, because if our reserve has dropped. Okay, no, the last one it went up.
Yes.
But before then, it's been going down for about 4 weeks, I think.
Yes. And we're not necessarily benefiting from oil prices at the moment.
We're not.
You know, it's a very sad time for us, because at this moment, we should be on the smiling side.
Algeria is smiling.
Algeria is smiling. And, you know, it's sad because we're also one of the top producers of gas in Africa. These are opportunities that we could have leveraged on. But Algeria has taken, you know, the fact that they are the ones on the forefront.
Yeah, but the federal government is saying a whole lot about NNPC Limited. It's talking about the pipelines. We have some projects. I know I did a report over the weekend, you know, on some of the projects. And the lawmakers have gotten interested. Maybe that will push.
I think Nigeria they're very good at talking rather than implementing. And it's becoming frustrating for, you know, many businesses within the country. They have all these ideas, they have policies, they have all that, but with implementing those, it proves very difficult for them. Even if they do, they don't get it up to, you know,
maybe
the 100%. We start and we leave it at some point, yes. And it's becoming frustrating. So I'm not so sure where that will be going.
Normally you would be the fiery one pushing me on, but today I think
we should definitely be. The only thing we can do is remain hopeful.
All right, well, Ali, thank you so much for sharing your thoughts with us this morning. Enjoy the rest of your day.
Thank you for having me.
We'll head to the market in a bit, but we'll take a breather and then we'll be back to have Anita. Yeah, welcome back. Let's head straight to the market now, Anita. I don't know if you're starting with the equities, but I know the equities closed in the negative yesterday, right?
Yes, good morning, Inia. Like you rightly said, I am starting with the equities market. Yesterday, I started with the fixed income market. But of course, the barometer, what you call the barometer of the economy, the equities market, it's the first full week of, the first full trading week of April. It looks as if the bear just doesn't want to leave the market. Of course, it mauled the market yesterday. So let's take a look at how it turned out at the close of Monday's trading session. Opening the week, it was down by 0.33%, which is largely due to the losses from the likes of MTN Nigeria, which was the major laggard there. And then, of course, we had Access Bank, we had FBN Holdings, we had Zenith Bank, and then we also had UBA, as well as Lafarge, and the NGX group where the Nigerian exchange is listed. So in all, in terms of value, the market was down by about 84 billion naira, approximately what you call 83.57 billion naira. That's what was knocked off from this value here. Now, moving over to the sectoral performance, it's a mixed bag, but the Reds still have it, particularly the banking sector, which was down by nearly 1%, 0.99% is what it closed Monday's trading session, and that's no thanks to the 4 out of the 5 tier 1 lenders, in particular the likes of Access Bank, which last week it migrated from being just Access Bank into the holding company structure, and of course that was supposed to have some positive side to the market, but it didn't really rub on any magic to that space. In terms of the activity, overall activity, the volume, in contrast to what we had as a Friday's trading session, it was down by 14.7% at 219.49 million units traded yesterday. Value was down by 32.59% at 1.93 billion naira there. But it was only the number of deals, which is what you have in contrast to what you had on Friday, that was up. It was up by 12.67% in contrast to Friday's numbers. So that's what we had for the equities market. And of course, we just don't know. For month to date, starting the month, we're down at 0.6%, while in terms of year to date, it has lowered from the 10% to about 9.3%. That's what we have for the year to date performance for the equities market. Now let's sweep over to the smaller unlisted securities market. It's kind of having a good time there. It's been able to sustain the positive trend, which it ended last week's trading session. Now, as at the close of Monday's trading session, it was up by 0.9%, and that's largely due to its own exchange, the NESD. It was up by 10% at 13 naira 20 kobo. Over to the activity of that space. Well, the volume was the only one in the red. It was down by 80.87% in contrast to what you had previously, but all the rest were in the green. Now, let's talk to a stockbroker who that's Mohammed Kayode. He's a stockbroker and head of dealings at APT Securities and Funds. So let him give us more insight into how the market turned out, how the market is turning out today. Thank you for joining us, Mohammed.
Good morning.
Okay. Now, it's still in the red. Access Bank was supposed to have some magic wand on the market, but we're still seeing the bulls, the bears in control. Can you tell us how the market is turning out at the moment?
Yes, right now we're in earnings season, and as we know in the market, we have two information that determine what happened in the market, or that determine the market of stock prices. We have market fundamentals and also economic fundamentals. As we have it today, we are in earnings seasons, and all these results that have been declared by this company are very encouraging and very good one. And also the dividend, the corporate actions has been encouraging so far. We have seen a situation whereby stock like Zenith was able to give 10 kobo, stock like GTB giving 3 naira. I mean, Zenith giving 3 naira 10 kobo, GTB giving 3 naira. We have UBA giving 1 naira. We have Asset giving 1 naira. We have UCAP giving 1 naira 50 kobo. So all these are good results and also good corporate action that has been coming out. But to our greater dismay is the fact that the stock market continue to come down. We see a market indices coming nosediving. Though the extent of this coming down is not that serious, but as we have it today, I believe that the result of some of those stocks are marked down, and whenever they mark down a stock, is going to push down the capitalization of that stock, and also the stock and also the index. And also the market capitalization, especially when you are marking down stocks that have fundamentals. So this is what happened, and when such thing happen, when they mark down a lot of stock at a particular time, you see markets going nosediving. But what we expect is that whenever they mark down like that, with the good result that's been released, the investors will have picked some stocks so that in the expectation of good result in also third quarter, because it's a trend that is supposed to follow. When you are having the end of the year result good, you are expected to have a first quarter result to be good. But because of the fact that we have weak economic fundamentals as we have it, and also the electioneering campaign that is in the country today is now making investors to kind of looking and watching what is exactly happening in the market.
Okay, so now the first quarter has just ended, and you mentioned something about the market not responding to very good numbers released. So now, what do you expect? Do you expect the market to respond to first quarter results, which are expected to be trickling in a couple of weeks from now? What's your forecast for that?
Okay, you know, investors are very proactive. Whenever they see a good declaration for the year end, and you know the declaration comes towards the end of first quarter, when the result for the first quarter will not be out. So people must have foreseen or must have projected what the first quarter of most of those stocks may likely be, and they will start to pick stocks. So now that is happening like this, as far as I'm concerned, I believe that the third quarter result is going to be good as well, because there's no major issue that we say that we can say predict that the result will not be good. But the issue is that the issue of electioneering campaign that is now gaining momentum in the country and don't forget that whenever this Nigerian election is very expensive, and whenever this thing starts, you see that a lot of activities will be happening in the market, and you see that the market is likely to go into various directions. So in the event that the third quarter result is going to be good, I doubt, and I don't see that the market is going to be that is going to respond positively to that result just as we have it now.
Okay, thank you so much for that forecast, and of course, we definitely will keep our eyes on the market as usual. So that was Mohammed Kaide, the head of securities dealing at APT Securities Limited. So, and as far as the market is concerned, it's still in the red, like I showed you here. So,
you want to tell us a little bit about the fixed income market? What happened yesterday?
Yeah, well, for the fixed income market, it's still bearish for the bond space, while for the treasuries side, it was bullish. Going back to the bonds segment, there was some sell-offs in the March 2027, the July 2030, as well as the March 2036 bonds. So that's why we saw that bearish side of the bond segment. Then over to the treasury bills secondary market, which had a bullish tilt. The average yield there had declined by 2 basis points to 3.2%. Of course, we saw participants demanding for the 52-day to maturity bill, and then it expanded. The average yield there expanded at the long end, following profit-taking on the 206-day to maturity bill, and then the average yield was flat at the mid-segment of that market. There was no transaction, there was no trading in the OMO space, but the average yield there was unchanged at 3.6%. So it was kind of like a mixed sentiment for that market. And of course, that market for now, it's not having a particular direction. We should be having one of our analysts to speak on that. But I think we'll do that. We'll do justice to that in Wednesday's trading session.
Do that tomorrow, Anite. But it's interesting that your guest, Mohammed Kaide, mentioned the impacts that perhaps the preparation for election might be having on the markets, you know, perhaps because we've been trying to understand why, in spite of the good results, you know, dividends, payments, it seems not to be having a lot of impact in the market. Perhaps it's the election, and investors are watching out to see how that goes, what direction it will take, and then they would know what else to do. I guess that's just one of it. Thank you so much, Anita, for giving us a market analysis this morning. We'll take a short break. When we come back, it's still the market, but this time it's crypto. Join us again. Welcome back to the home strike now on Business Morning. This morning, Ladi is standing by to tell us if the election is also affecting.
No, the elections
it's far away, right?
They don't impact this market, right? Yeah. Well, but looking at the market sentiment, though, we're seeing it's 53 points neutral. It's trying to tend, towards greed at this point. We're seeing a lot of price action, and traders actually getting involved in this market at this point. We see the market cap, $2.16 trillion. That's up by 0.33%. And we see volume is up this morning, $107.36 billion traded in Bitcoin and the altcoins all put together. Bitcoin dominance, 40.99%. And we see a price of Bitcoin this morning, $46,600. We see Bitcoin there trying to stay above that 47K level. So traders are watching that level at this point to see if there's more uptrend power for Bitcoin. At this point, it's $46,654. Looking at that $47,000 mark, volume traded $30.96 billion. And we see price of Ethereum still holding up above $3,500, is up 0.42% this morning. Volume traded $17.03 billion. And we see the top of the market cap, it shows BNB in the green this morning because we're seeing Bitcoin ranging at this point. So when we see those minor pullbacks, we see that the crypto, the altcoins actually have a sort of pullback at this point. Solana there, trading at $132, is down 2.62%. BNB in the green, just up by 1.08. And we see XRP looking like a stable coin at this point, 82 cents. Let's bring in Rumi Ofi now, digital market analyst. Hello, Rumi.
Good morning, Ladi.
Good morning, Rumi. Great to have you. So it's turning out to be a regulatory year for crypto. Now we're seeing UK financial regulators calling on stakeholders for contribution for crypto policies. What are you hearing about this?
I think it's a welcome development. It only shows that the government is actually trying to see reasons. And I also like the fact that it's all inclusive. They're coming up to say, oh, if you're a technologist, come. If you're involved if you're a crypto specialist, come. If you're academics, come. Also regulators in the financial institution and consumer bodies, not like a situation in the US where you see only those running exchange platforms to come and dialogue with government. I think this will go a long way to a better framework where I think the UK is positioning themselves to be a blueprint for other countries to follow. And I also believe that we in this part should keep tabs with that so that we can learn from it.
All right, but we're seeing the EU, toward a different path. They're clamping down on, private currencies. But how are you seeing, privacy tokens perform in the market ever since that happened?
It's usual for it to perform in that certain way because I think what the EU vote came about with all of the legislations and everything is the fact that I think it's a part where they don't understand how this can work. And I think later on they're going to learn from the UK because now the UK government is saying that they're going to adjust their banking act, and that's the Act of 2009 and the financial banking reform in 2023. They're going to put in structures to accept even stable coins as payment to come up in the future. And I also like the fact that the Economic Secretary, Jen Gellin, said that the FCA, which is the Financial Conduct Authority, is going to put in a regulatory sandbox for DLT technologies for their financial market and issuance of sovereign debt. So that should send a signal that this is not how, the way you guys look at it, that is not how it is. This is a new technology. And if you don't key into it, it becomes an issue. There's certain things he actually said in his consultation that I really like, that it is this regulation is going to expand the scope for further crypto assets like Bitcoin and cryptocurrency consumption. But again, the regulation is what they are really, their goal is to come up with better regulation. And it's quite interesting that they're saying that they're going into NFTs too. I don't know if you saw that.
Right, yes. But it's quite interesting because, you know, with the decentralized nature of crypto, it seems control is going to be difficult.
From the regulatory point of view, like the head, at least the economic secretary was saying, and also the some of this stuff, the chancellor of the chapter, which is Rishi Sunak, he actually says that they are after a regulation that affects the exchange platform, that is companies or crypto firms with digital assets that does cross-border payments that will be affected, not the crypto asset itself, because it is from this exchange platform you will be able to track activities that are going on. Let's not forget that Gemini has actually come, Gemini, an American platform owned by the Winklevoss twins, to see that about in every 5 UK adults, about one of them is actually holding cryptocurrency, right? And which means that the interest is actually growing. So what government needs to do is to put regulation around those platforms that are in charge, because the token itself, it's decentralized.
All right, Rume, always good to talk to you. Thank you so much, Rume.
Thank you very much, Vladimir.
All right, so in the top 5 gainers, we've seen audio topping out counters up about 22.34%. But, you know, as regulation talks, you know, keep going at this point, we could expect a lot of volatility in the market depending on which way regulation is going.
Yeah, well, like you guys always say, regulation is good because it gives more investors the confidence that it's a sure market. It has some eyes on it, and then it could attract even more investment into the market. So I believe it's a good thing for the crypto investors or the crypto community.
Quite a good thing.
All right, Laddie, thank you so much.
Thank you.